Hey, everybody, what's going on? It is James here, and we're going to look at some Bitcoin charts as well as some broader tech market charts today. So the first chart I want to take a look at is this Bitcoin versus QQQ, because what's happening right now is worth paying attention to, and very few Bitcoin maxis even want to consider this chart. So if you think about Bitcoin, Bitcoin is roughly 17 years old. And when Bitcoin maxis talk about Bitcoin, they always talk about how much it's worth if you bought it way back when. But almost no one bought it way back when. Most people who are in Bitcoin today started buying Bitcoin after 2020, 2021. That aside, if we look at a chart of Bitcoin versus QQQ, it is actually worth less today than it was at its peak in 2017 and early 2018. That means Bitcoin is worth less today versus the QQQ than it was nearly 9 years ago, over half its life. The 2025 bull market did not even meaningfully close above the 2021 highs. In fact, every trader watching this video will immediately recognize this area up here as nothing more than a bull trap. It snuck above previous resistance and then closed right at it. That is a textbook bull trap. And I'm looking at this chart and I'm sharing this chart because I saw somebody on Twitter today making a very arrogant, very condescending post that anybody who was selling Bitcoin at 77,000 is an idiot. And they were comparing it to the 2023 market and selling on this pullback through here. And they're saying, people who sell always end up regretting it, essentially. Not true. I sold the bulk of my remaining Bitcoin up around $100,000 to $115,000. I distributed it over about 15 orders. I have no regrets about selling it. And I also sold a bigger chunk of Bitcoin back around 60,000 in October. I think it was 62,000 in October of 2021. And I never bought that Bitcoin back. And so it's like, well, it's worth almost 80 grand today, so don't you regret it? No, I don't regret it, because I took the money and put it in other assets. If I was still holding the Bitcoin at that point, instead of putting it in QQQ, I'd be down about 39%. Now, even if I didn't put it in QQQ, which is obviously a risk on asset, a growth asset, even if I just went with something ultra safe like SGov, which is short-term treasuries, it's an ETF for it, SGov returned about 3.8 to 4.2% annualized return since October of 2021. Bitcoin, it's returned 5.3 to 5.8%. So basically 1 to 2% more return for a whole lot more risk. And then we have to ask this question. What was the return of the QQQ since October 2021, including dividends? Bitcoin was 5.3 to 5.8%. Oh, well, look at that. The QQQ, which is a safer investment, has returned 12.5 to 13.5% in the very same time frame that Bitcoin's returned 5 to 6%. The writing is on the wall, folks. You can ignore it if you choose to, but it is there plain as day for you to see. Even the pump that everybody is like excited about from 60K to 80K really was no pump at all. It was simply riding the coattails of the QQQ. This is what actually happened during that time. Bitcoin went sideways versus the tech market. Bitcoin is a risk on asset. It is supposed to overperform in bull markets, and then of course it underperforms in bear markets. In other words, it falls harder and faster in a bear and rises harder and faster in a bull. But instead, it's actually fallen during a global bull market. When the bull market in stocks eventually ends, the most likely outcome is stocks will melt down, and of course, Bitcoin, being a risk on asset, will likely melt down with it, even though it's already melted down. This is a huge problem for Bitcoin holders. It doesn't mean that it's impossible for Bitcoin to go up, because there's always that outlier chance. But right now, going up is actually the tail risk. Going down is the most likely scenario. Now, I'll show you another chart that I don't believe I've ever shared before, and I've never seen anybody else share it. This is Bitcoin versus TLT, which is an ETF for long-term treasuries, 20-year treasuries, if I'm not mistaken. And if we look at this, this gives us a really clean look at Bitcoin. For example, if we go back to the 2020 crash, what it actually did back there was retest the 2018 bear market low. Would have made it very easy to buy Bitcoin at that level. When it pumped, what it actually did was pump right up to its 61.8 Fibonacci level. If we look at 2021, it made selling there easy. Now, I was using a Bitcoin versus QQQ chart, which showed a lower high, but even Bitcoin versus TLT, it actually showed a roughly equal high, which of course is a textbook double top, made selling there fairly easy. So this is what you want to look at, because if you're looking at Bitcoin versus cash, that is an unfair comparison, because of course it gains value versus cash because of inflation. Everything tends to gain value as long as it doesn't die, right? That's the general idea of inflation and how it works. Prices appreciate. You want to measure it versus other assets. Like, this is a safe long-term bond type of asset. And so this gives you a really good foundation. How did Bitcoin perform versus a safe investment? You want to measure it versus something like the QQQ. How did Bitcoin perform versus other risk-on assets? And of course, it's failed miserably over the last 5 years. If we look at the QQQ chart, this is also a big problem, because when we look at the QQQ and we measure it versus TLT, we get a chart that looks like this. Now, very few people are going to look at this chart and say, this chart here does not resemble this chart here. This is clearly a bubble. Again, that doesn't mean I know when it's going to stop or when it's going to top. Parabolic push in a bubble often ends up doubling the market. So where does it double from? I don't know. Is it down here like this, in which case it's literally double? Or maybe is this the pullback that it's going to double from? Maybe this is the pullback that it's going to double from. I firmly believe, I could be wrong, but I firmly believe this leg here, this sudden 30 to 40% move in a month and a half, I think that is the actual blow off top euphoria phase of the market cycle. And I think that we will see within the next 6 months, stocks roll over. And if stocks roll over, I believe Bitcoin will roll over with it. Now, somebody got upset with me for saying that the market was euphoric. They thought I was talking about Bitcoin, and they basically kind of had a chuckle at my expense. And I had to explain to them, look, I'm not talking about Bitcoin. I do not think that Bitcoin is in euphoria. No, I do not. I think Bitcoin is in denial. Yes, I know this was a higher high on the US dollar chart. It doesn't matter. It doesn't have to match this chart exactly. It's about the underlying sentiment. I actually do believe that what we got was anxiety right here, and that this right here is actually denial on Bitcoin. If you look at it on a weekly chart and you look at it versus QQQ, I can make an even stronger case. I can say, hey, look, euphoria right through here, complacency, anxiety, denial. So that's my stance right now. I believe that the broader tech market is actually in the euphoria phase, and that it's probably going to top in the next 3 to 6 months. I lean toward the sooner rather than later, but I'll give it a 6-month window. I believe that when QQQ melts down, Bitcoin is going to melt down hard and fast with it. I believe that all these ETFs, the ones that we're seeing record outflows from, I believe they will start dumping Bitcoin in a big and meaningful way. And even strategy may go ahead and tip the hand and start selling out some Bitcoin, which they've kind of hinted at in some of their earnings calls. I also believe that many people who are holding Stretch, who have been told that it's a safe asset and it's almost like a bond asset, will start to realize that's actually a high yield asset. And high yield assets tend to be risky. And historically speaking, when a yield seems too good to be true, it often is, and things often end in a catastrophic fashion. Please stop now and give the video a thumbs up. Subscribe to the channel for more data-driven content. And as always, please remember that I am some guy sitting in a spare bedroom. Nothing in the video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor for making any type of investment in cryptocurrency, the stock market, precious metals, Forex, or any other tradable asset. And as always, it helps me if you will share this video with a friend or two. This is James, and thanks for watching.